Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, July 24th, and earnings season is well underway, folks. We have got some big numbers coming from Google, Tesla, and the ServiceNow results from last night. We've also got some great guests coming on the show. The CEO of Vanta is coming on to talk about their new funding round. We've also got the CEO of LTK coming on to talk social commerce. And then, before we go, we got a big scoop about OpenAI's new funding round for you, and we're going to get the latest from Washington, D.C., from our D.C. correspondent, who's going to tell us about the White House AI action plan. Before we get to the earnings, I want to share with you a big project that we just published here at The Information. Our generative AI takeover list is now live. It's the second time we've published a list like this. It basically shows more than 50 startups that our reporters have identified as prime acquisition targets. We know AI M&A is all the rave these days. A couple names on that list: U.com, Kika AI, Together AI. This is all from analysis and reporting that our newsroom has done, so be sure to check that out. Okay, let's go on to earnings. Last night we had Google, Tesla, and ServiceNow reporting, and to simplify things, I'm going to give you one number that you need to take away from each of those prints. For Google, the number that you need to know is $85 billion. That is how much the company estimated it will spend on capital expenditures this year. The most important thing here is that it is $10 billion more than what the company said earlier this year it was going to spend. That budget, of course, is what Google is going to put towards data centers and other AI and cloud infrastructure. And the good news is that both search revenue and cloud revenue growth accelerated in the quarter. And so Google is firing on all cylinders. Tesla, on the other hand, is a bit of a different story. The number you need to know is negative 12%. Tesla's revenue in Q2 was 12% smaller than the same quarter last year. I mean, look, we all knew this was coming. The company is selling less cars. It has lowered its prices. Elon Musk seems to be making light of the situation, at least he was last night on the call. He's frankly more interested in robo-taxis right now, but I'm going to link our briefing newsletter in the show notes where you can get all of the details on that. And last but not least, we had ServiceNow reporting last night. The most important number there was $125 million. That is how much the company raised its sales forecast for the year. And the most important thing about this, is the fact that if ServiceNow is raising their sales forecast, it's one of the first enterprise software companies to report earnings publicly. And it kind of suggests that businesses are spending on software despite the macroeconomic uncertainty. And that is something that I am looking forward to getting into with our next guest as well. Okay, speaking of our first guest, Vanta is one of the fastest growing names in the business of compliance. The company raised $150 million this week at a valuation north of $4 billion. The company counts Cursor, Duolingo, Ramp, and Atlassian among its customers. And I want to bring on CEO Christina Cacioppo to take us inside her playbook for the company. Christina, how you doing? Welcome to the show.
Doing well. Thanks so much for having me.
So, look, Vanta, some people might have heard of the name, some people may not have. The product is a little bit in the weeds. So what is it that you sell? Let's start there.
Yeah. So we sell a trust management platform, but that's a little jargony. So what we do is we help companies build out or improve their security programs internally and then get credit for that with their customers through compliance audits, security questionnaires, trust centers. And so it's really about turning security into a business driver, so more security happens in internet companies.
Got it. So it's a combination of security and compliance software.
Yep.
There's a number floating out there around your top line, $220 million in annual recurring revenue. I'm comparing that to the number that you put out about 18 months ago, $100 million in ARR. This is staggering growth. Where is all this growth coming from?
So, it's from our customers, kind of obviously.
Right.
I think what we see, Captain Obvious here, but seriously, what we see is that two things. One, there's more and more startups and companies being created, right? And so we've just seen the pace of startup creation, continue over the last 6 or 8 years. Like whatever the COVID boom was, we're higher than it. There's that piece. And then we see the bar for trustworthiness in software is also just ratcheting up. And so like Cursor is a great example. They came to Vanta when they were very small, even, not just 50 people small, but like 5 people small, because it was a product-led growth motion. But as they were growing and expanding into larger companies, the larger companies would say, hey, we really want our engineers to use Cursor, but giving, this 5-person company access to our code base is really scary. What, assurance Cursor can you provide us so you have reasonable security practices? So they turned to Vanta, started to build out their security program. I went through a SOC 2 audit, had that report. They also have a trust center. But again, it's like 5-person Cursor needed that. Even Cursor with its like incredible product market fit and virality to sell to larger companies.
I talked about ServiceNow earnings at the top of the show. I did a story on ServiceNow, and I got to know the ITSM space pretty well. And it's it's not the most exciting space, as far as software goes. I mean, the only thing, I mean this with respect, but the only thing less interesting than ITSM might be compliance. And so, I mean, like, as you thought about your vision for the Vanta brand when you were starting the company, I mean, what was the vision for the company?
Yeah. Okay. So it was compliance is this like misunderstood space where if you say it to an engineer, you run screaming from the room. I literally did that when I worked at Dropbox, right? Like no one is like, jumps out of bed, or very few people, I should say, jump out of bed to go work on compliance, right? But I do actually think compliance is quite misunderstood because done well, it opens up new markets. It's a huge growth driver. Again, the first SOC 2 report for a startup will like let them talk to enterprise customers. The first ISO 27001 audit will like open up Europe. HIPAA and high trust open up healthcare. And so these are really like business unlocks and market unlocks. And with that comes a ton of growth. And when you think about compliance that way, I think it's like actually quite misunderstood.
Right. So, I mean, unlocking new markets. I mean, but help me understand the brand. I mean, how you guys just hired a new chief marketing officer from Brex. I mean, what is your vision for the brand?
Yeah, so we do make software. We also make a billboard on 101 that's been up for a couple of years. That people know it's compliance that doesn't SOC too much.
Right.
And I do think that slogan is us and the brand at our best. And so the way we think about it is we take ourselves seriously, we take our customers seriously, we're doing serious work. Sorry, we take our customers seriously, we're doing serious work, but we don't take ourselves too seriously. And so the, pithy brand attribute is with a wink. But I think Vanta is at its best when, like, again, we are kind of winking at our customers, and that compliance that doesn't suck too much is a good representation of that, I think.
What brands do you look up to?
Um, Different ones. I mean, all the classic ones, like Nike, like everyone loves Nike. And I think that like Just Do It is actually so powerful. And one of the things I really like about that is they don't say, high performance athletics is easy. They say high performance athletics is really hard, but you do it and you'll be glad at the other side. So I really like that. Um, I think uh Ramp does a tremendous job of like having a high level message and pulling it through all of their material. And we can all kind of like say the Ramp value statement because they just repeat it at every level all of the time. And so like that consistency is really impressive. Um and then I loved and loved, but I loved the Glossier brand when it came out. Kind of more like millennial female coded, but I just thought like they nailed their moment.
How do they nail it?
I think when they came out in whatever it was, 2015, 2016 or so, like they understood their customer, which was kind of like a millennial female, and like spoke to them in a language and like a text language and a visual language that just felt like a friend.
Hmm. You guys raised $150 million about a year ago. In now you've raised
Almost, yep.
right. Yeah, I mean, I think it was 13 months.
April.
I'm wondering how the fundraising environment has changed in the past year from your perspective,
Oh,
or was it the same? But could have been the same.
so this round came together, or we didn't even in some ways plan to raise. We didn't have a deck. It was like conversations with their existing investors who got excited. We had a conversation about numbers. We went to Wellington, who we've known for a long time, but was not an investor, and they ended up leading. And so in that sense, easier. But I think what it actually was we'd gone out a year ago. we had our projections, we had our numbers, we hit them, even exceeded them. And so it was just this kind of year and also kind of multi-year like history of execution. And so that made it easy, if that makes sense.
Hmm. I mean, just going back to the growth of the company, like I said, $220 million in ARR right now, 100 million about 18 months ago. You talked about it being, more customers and more customers spending more with you. As it relates to product lines, I mean, what is the product line that you are investing most in right now?
Yeah. So one, I don't know, theory I have, I don't think it's that controversial, but is like all the companies that are long-term and sustaining have multiple products.
Hmm.
And it's really hard to go multi-product. And so you should do it early. It's always hard. It gets harder over time. So do it as early as possible. So we've tried to do that. So, we talk about our core product line as automated compliance and GRC, governance, risk, and compliance. It's what most of our customers use us for today and know us. So there's a ton of investment going in there. Then we have started additional product lines around security questionnaires and trust centers that are attached to probably north of 50% of our customers, maybe north of that. We have a new product around vendor risk management, which helps larger enterprises think about the software they're bringing into their company, procuring. And that we're very excited about as well. Just acquired a company last week to make that product line even better.
Right. And I was going to go to acquisitions. I mean, you acquired a company. Well, you've said specifically that you would like to make more acquisitions with the money. What exactly are you looking to buy?
Yeah, really strong tech and technical teams that are building in adjacent areas to Vanta.
Like,
So what we find is there's, 2020, 2021 was sort of the years of Vanta knockoffs. There's lots of those still, but even acquiring that is tough because we have the tech, right? And so you're just kind of throwing that away. You get a talented team of people who know the space, but it's harder to make the numbers work in those. So taking last week's acquisition as an example, it was a team out of Israel that was building outside-in risk scoring. So, from the outside of a company, what is the risk posture? What do you think about that? We brought that in because we have a lot of inside-out data. And so when you couple those two together, you get a much more compelling product offering. So I think last week's acquisition is a really good example of what we, aspire to do more of in the future.
right. But yeah, I mean, I just want to double click on that. I mean, what you talked about the different product areas you guys are building in. I mean, which product area do you, really think it will make sense
You don't
probably
like the all of
to
them answer?
say it again? No,
You
we'll
want
take it.
not
Yeah.
all of them, yeah.
No, because I mean, you mentioned all these different product lines, but which one in your mind are you like, we're going to have to buy? I mean, building here is just like we can't get there fast enough.
Oh, nothing that we have today, I feel that way about.
Okay, so you're committing to building.
Yeah, for the stuff we have today. Yeah, totally.
Great. Last question for you. I just want to understand a little bit your view on sort of enterprise software spending in the current macroeconomic climate. We're going to have a lot of software companies report. We've had a couple of them report already. How has, what are you hearing from customers in terms of how they're thinking about their budgets and enterprise software spending broadly in this climate?
Yeah, we've actually seen and heard it anecdotally increase quite a bit. I think there was a bit of a lull in 22-ish, and then the AI boom has sparked a lot of that up. And I think it's with the premise of kind of efficiency savings, cost savings. Oh, if you have this AI support tool, you will at the very least stop hiring on support agents. I don't know if we've really seen as much of that happen in practice yet, but that narrative is still driving a lot of software purchases today.
So you're not seeing people pulling back because of the macroeconomic climate right now?
We are not. I think there also might be a little bit of we thought the tariffs would be bad. They don't seem actually that bad. We thought, the news of the week would be bad. It hasn't actually shown up, right? The volatility in the media is not matching the volatility in the markets yet.
Are you guys looking to go public anytime soon?
You know, uh, companies that are long-term and enduring tend to go public. So, think about it that way, but no plans right now.
26, 27?
No plans.
All right. Well, thank you so much, Christina, for coming on the show. We really appreciate it. That is Christina, the CEO of Vanta. Our next guest has spent the past few years capitalizing on the dramatic shift in e-commerce as social media has played a much bigger role in influencing what people buy. Amber Venz Box is the president and co-founder of LTK, which is a website that you may have been redirected to through Instagram if you've clicked to see an influencer's recommendations. The company was last valued at $2 billion. And I want to bring on Amber to talk about how AI could be the next big shift for e-commerce. Amber, welcome to the show. Thanks for being here.
Thanks, Akash. Congratulations.
So, look, you've built a really interesting company. Help me understand how LTK makes money. Let's just start there.
Yeah, I'm going to walk you through the three sides of the business. We are a three-sided marketplace. Really, LTK is the global platform for creator commerce. And we're unique because creators don't just post here, they're building lasting businesses here. So with their LTK profiles, they can retain, nurture, and also grow direct relationships with their audiences. And they're driving daily high intent shopping behavior. So for them, this is owned distribution. This is not algorithmic reach. Then we move to the brands. So for brands, LTK is a full funnel performance channel and it really scales globally. We have creators in over 100 countries. And being on the LTK platform as a creator means that we're turning those creators into a retailer's tech-enabled power partner. These are not social only built on platforms that have perverse incentives in the way that they're engineered. This is purpose built to drive outcomes. So
Right.
behind the scenes, we're providing the infrastructure, the attribution, insights, payments that last year drove over $5 billion in resale sales. So,
Right.
quick summary, three-sided marketplace, mission to make creators as economically successful as possible. Over a decade building this, the data attribution payments. LTK is really the rails that the creator economy runs on.
Right. So you've got the creators, you've got the brands, and then you've got the audience. In terms of the business model, the way you make money. I mean, the way I understand it, correct me if I'm wrong. I mean, LTK takes transaction fees on customers that buy through the platform, that are redirected to the platform, and then are redirected to the site. And then you've also got this other line of business now, which is working directly with brands. Help me understand sort of that side of the business.
Yeah. Well, and some adjustments actually to your assumption on the transaction revenue. So actually, the vast majority of purchases happen on the LTK platform. So you had mentioned kind of a redirect through or traffic from outside.
Okay.
Today, the bulk of LTK traffic is actually direct traffic.
Oh,
A trend
interesting.
not
Okay.
just for creators,
Through the
but
app.
as well. Exactly. So this year we're closing in on $6 billion with a goods sold. The vast majority of that is happening on platform direct load.
Hmm.
The second side of the business is collaboration revenue that you referenced. So this is platform fees for LTK on campaigns that are running through the platform. A campaign is a flat fee paid to a creator for a certain activity on a certain platform at a certain time. And today our creators, they earn roughly half and half. So half of their revenue is coming from flat fees, half of it's coming from transaction revenue. We're aligned to that business model. We earn when they earn, and so our books look the same.
And so these are brands coming to LTK saying, "Hey, I've got $10,000 to spend on some kind of a campaign. Help me find the right creators and help me sort of manage this campaign." Is that how it works?
Really, it's a creator management platform on the brand side. So it's everything from kind of sourcing, discovery, management, gifting codes, commissioning, doing flat rate paid collaborations, running, commercials on television, licensing images for your website. So there's a lot of things that we have been able to put into the platform that creators are now able to sell today. Over the last couple of years, we've actually been able to grow the revenue that our creators are earning by several billion dollars by really driving efficiencies across the entire marketing team. So now it's not just the marketing teams here today. It's social, it's in-store, it's content, it's catalog, it's really all groups. And the CMO overlooking that, and they're able to overlay all this information and then make more efficient decisions. I truly believe what Goldman has actually put out as well, which is that creators will actually be the powering force behind the entire digital economy. And we're making that a reality through the LTK platform.
I want to talk a little bit about your perspective on AI, but again, just I'm fascinated by the current state of the business. You've got the transaction fees, you've got this business working with brands. What's the breakdown in revenue right now between those businesses?
Yeah, it's about half and half. So slightly more on the flat fee business today. We did start in the transaction fee business
What was it? What was it a year ago?
it has been, it's all The last couple of years, it's been about half and half. I would say that we are finding more ways for brands to spend efficiently. So it has grown more on the flat fee side, but we've also grown from the pie has just gotten a lot bigger. We're talking about going from $1 billion invested a couple years ago to now over $3 billion invested. We're talking about going from, just a couple billion in retail sales to now closing on 6 billion in retail sales. So it stays pretty close to half and half, kind of teeters both ways. But like I said, the pie is getting much bigger. And it's really a reflection of a significant shift that both we are benefiting from and driving, because consumers are now, they're making purchases based on trust. And you're seeing huge shifts in where trust comes from in the market today.
I want to ask you about AI and how people are finding their shopping recommendations now. We've written a lot at the information about how it's only a matter of time before people likely start shopping through these chatbots more and more, and you know get their recommendations that way. I mean, if I just think about myself, where I might have found something through social media, for example, or through an influencer, maybe tomorrow I'm finding more things through these AI platforms. Do you think that this shift, potentially away from finding things through influencers and maybe more using some of these AI tools, I mean, does that represent a threat to your business at all?
We are both leveraging those tools to drive efficiencies, personalization. But what I do think that AI is not going to be able to reproduce is the browse and discover. And so when you think about, like, why is it that you wanted to search for that hotel in San Miguel? Or why is it that you wanted barrel leg jeans? Or why did you want hokas? It's probably because a creator told you about them and recommended them. So I find that, it's much like going to the World Superstore. When I go there, we all know what I'm talking about. I know that I'm searching for little girls' ballet flats. I know I'm searching for Epsom salt. I'm there. I'm highly intent driven and I can get an efficient outcome. But where AI falls short is on the browse and discover. And what we uniquely do is actually give you browse and discover in the highest trust environment, which is through human created content. So to be on LTK, a creator actually does have to go through the application process, be vetted, KYC, the whole deal. And so for a consumer to come in, it's such a high trust environment, which is why we see two core things happening in the LTK consumer app today, which is a top rated app on the App Store. So first, they're coming in for control of their feed. They've chosen who they want to follow. We're giving them that reverse chronological, no algorithms, video first feed of the people that they've chosen. And that's there, and they have confidence in that, both for the creator and for the consumer. The second thing that they immediately go to is search. So we are also leaning into the utility element and layering in AI for personalization on that, because they are also coming to us to see what people are saying about those hokas or San Miguel hotels. And so you'll see both happening in the LTK app. But I think what AI cannot replace is browse and discover.
So do you guys allow any AI generated content on your platform at all?
So assisted. And actually, some of that, actually, we as a platform are helping them with. So last fall, we actually launched our AI, LTK AI Copilot, which does a number of things for our creators. They're loading in content, they're editing it, creating it, adding music. The next step, we take over. So we're going and saying, hey, we identified these products within this content. Are you right or wrong? That's automated through AI. They can approve, deny, edit. We move on. There's more through the funnel that's now being automated
Right.
on the end of this. So the automation through really their CRM is also LTK AI. So right message, right person, right time, whether that's a push notification, an in-app notification, an email to their customer based on the specific message that customer would need, also all automated.
Right.
Our promise to our customer is that you are getting a real human who's making real human recommendations. We do not allow AI bots on the platform.
I mean, that's kind of interesting. I mean, this idea that the trust that you talked about. I mean, it makes sense. You have to be a person to create that content, and so I think based on some of the other conversations we've had, it might be one of the few platforms that that people can turn to strictly get human generated content. And it sounds like you're leaning into that, and you don't plan to go away from that.
No, the 100% that's the promise. It aligns with our mission of making creators as economically successful as possible, not making LTK as economically successful as possible. But we believe those two things do align. But we're looking to empower humans. And so I think that's the first thing. Second of all, I hear a lot from our brands when they talk about brand trust or a trusted environment or brand safe. What I see happening across what used to be social, what Mark came out in May and said, we are no longer social media. I think his words were, we are now browse. We're now not browse. We're broad discovery and entertainment were his words. They've fully stepped out of the lane of social and now into that. Last year, they promised recommended content would take over. It did. This year, they're promising AI content takes over. It has. When I open the platforms, I have very low trust. I don't know about you. There's things I've seen this week that look really real, whether it's in politics, in weather, in local news, in recommendations that look real, but I have a suspicion that they're fake. And when you put a product or a brand or a person in a low trust environment, it actually reduces the efficacy of even that content living there. So the way that we think about it is LTK will be it's the creator app. If you want to go see real people that you can really trust and talk to and have a conversation with and engage with, then we're doing that. So all of our development has really been around trust between the creator and their audience and the ability to reach them. Shortly, actually, in a couple of weeks, we're launching two-way messaging between creators and their audiences, kind of in a more outright way on the profile. We've now made it where you can connect your phone book. You can see who your friends follow. You can see the content that they like. So we're finding high trust pathways to get you to more creators that you would like. But we are definitely taking an opposite approach to what we see across broad entertainment platforms.
And sorry, I mean, this is a technical question, but how do you actually, creators are uploading all kinds of content. I mean, how do you technically know that this was AI generated content versus this is actually a person? I mean, the lines are very blurred these days.
Yeah. We take applications and they are human reviewed. So it goes through a machine process, but ultimately are human reviewed. And we're looking at the body of a creator's work. Our creators are publishing on an average of 4 platforms today. They've been publishing for a period of time at a certain volume with a certain engagement. And there are actually articles you can, I'd point your audience to see what happens when an AI creator enters the chat. They actually don't chat. So they're not engaging with their audience. They don't know what to say. There's a Business Insider article that came out and it said, hey, this guy, he was able to grow his Instagram audience to a certain level. It's an attractive human. They're doing attractive things, but he wasn't able to monetize because he wasn't able to build community and then back to trust. And so that's why we're building in really a lot of the community and trust tools into the platform. You have to be a real creator to be accepted into LTK. Can you use AI to make your product better? Certainly. We're using it even through automated DM processing. We let people, for example, across social media, we let people say certain words and we automate, a message out to that. The creator's not physically sending it. So we're helping to automate workflow, but we're not taking any of the human value out of what the content is or says or does.
Well, it's a very fascinating strategy. Thank you, Amber, for coming on and telling us all about LTK's approach. Again, that is Amber Venz Box, the co-founder and president of LTK. We have known for a while that OpenAI is trying to raise $40 billion in equity funding this year. It's already raised $10 billion of that. And this week, the information was first to report that Peter Thiel's Founders Fund and Dragoneer Investment Group have committed $1 billion each towards the remaining $30 billion that OpenAI is looking to raise. There's a lot of vowels in that name. That deal will value the company at $260 billion before the investment. And I want to bring on the reporter who wrote that story. Sri Muppidi joins us from San Francisco. She is our venture capital reporter. Sri, welcome to the show. It's your first time.
Yeah, nice to be here. Thanks so much.
So look, this funding round that you were first to report, this obviously helps OpenAI because they can sort of start to chip away at the 30 billion. It also helps SoftBank, according to your story. Tell us about that.
Yeah, of course. So as you mentioned, OpenAI is in talks and has already announced that they're raising 40 billion at a 260 billion valuation. But the first tranche of that 10 billion has been closed, and then the 30 billion is what OpenAI is now raising. In the event that OpenAI successfully converts into a public benefit corp, SoftBank has committed to investing up to 40 billion. But they're able to syndicate out actually 10 billion of that. And so rather than committing the full 40 billion, they're actually able to put in 30 instead of that full amount. And so that's why it could potentially help SoftBank, because they don't need to dish out the full 40 itself.
Right. Who else is OpenAI talking to?
Yeah, so as we mentioned in the story, Founders Fund and Dragoneer each committed over $1 billion into the round. SV Angel, which has been historically known as an early stage investor and typically invests in pre-seed and seed companies, also invested in OpenAI's second tranche with over $200 million. SV Angel does actually have a growth fund as well, which I think may explain some of that type of investing. And then in prior stories, we've actually reported that OpenAI has had conversations with Saudi Arabia's Public Investment Fund, India's largest telecom operator, and gas giant Reliance, as well as UAE's MGX. And in the first tranche, we've previously reported too that OpenAI had received investments from investors such as A16Z, Singapore's GIC, Microsoft Drive, Coatue, Altimeter. And so I would imagine that, of course, I don't have reporting on this yet, but I'd imagine that some of these investors that previously invested would be interested at least exploring and investing in the second tranche as well.
You said in the story that that 40 billion is a record-breaking sum for the fundraiser. What exactly is the record that it's breaking?
Just in terms of how large that round is, I don't believe
Okay.
there's been a round that's larger than 40 billion, and also that valuation, 260 billion pre,
Yeah.
is quite incredibly large.
Yeah, I mean, it strikes me that the names that you just mentioned. This is probably the widest group of investors, or the furthest that OpenAI seems to have reached in terms of fundraising. Am I right there?
Um, can you repeat that question?
I just mean it seems to be a very vast group of investors, and obviously it has to sort of pull on every string it can, given that it's trying to raise this sum. It was kind of fascinating to me. I want to go to sort of the governance angle to all this. We know that OpenAI is trying to convert its for-profit arm into a public benefit corporation. We've also reported that Microsoft is, it's a bit of a roadblock right now for OpenAI in that plan. Could that have repercussions on this funding round?
Of course. So if OpenAI does not successfully complete its conversion and reorganization by the end of this year, or in certain circumstances by the start of early next year, then the round of 40 billion could actually be cut in half. And so this will get a little bit numbers heavy. But as I mentioned, the 40 billion, SoftBank has the ability to invest up to 30 billion and syndicate up the 10 billion. In the case that OpenAI does not successfully convert, that 40 billion can actually be cut in half into 20 billion. And so the 10 billion first tranche, but also this 10 billion in the second tranche. In that case, it will just be 20 billion rather than that full 40 billion.
I think, what, I think next time, Sri, when, the next time you find out who else has contributed to this 30 billion, I'm going to bring on a whiteboard, and we're going to draw out the whole cap table, because there were a lot of billions in what you just said. It's all the more reason for people to check out the story. You lay it out in full. Last question for you before we let you go. How competitive is this deal right now to get into?
I'd imagine it to be pretty competitive still, despite this being billions of dollars that OpenAI is raising. I'm imagining, this is all speculation, that there is a minimum commitment, and so only serious investors with large pools of capital are able to put in or invest at that amount. For example, Dragoneer and Founders Fund each committed over $1 billion, but SV Angel too has committed to investing over 200 million. So these are still hundreds, if not billions of dollars. And so the fact that OpenAI is talking to folks like PIF, Reliance, MGX, with also large pools of capital, it's still going to be fairly competitive for maybe a smaller investor to invest in, but that doesn't mean that there aren't some opportunities. I've been hearing, for example, a lot of folks trying to get into different levels of SPVs. So this could be a first layer, or second, or even triple layer SPV, which of course I don't believe OpenAI loves. And so I think that there's definitely a lot of competition to invest in this round.
Wow, it's a fascinating story that it's the funding round is playing out in front of our eyes, and so it's very cool to see how it comes together. Thank you so much for coming on the show, and next time I look forward to bringing out the whiteboard so we can make sense of the numbers together. That is Sri Muppidi, our BC reporter in San Francisco. There was big news in Washington, D.C. yesterday as the Trump administration released its AI action plan. The new plan essentially is a blueprint that could give AI companies a lot more freedom to grow and expand with less red tape. I want to bring on our D.C. correspondent, Sylvia Varnham O'Regan, who joins us. Sylvia, welcome to the show.
Hi, Akash. Great to be here.
So, what exactly is the AI action plan? Walk us through it.
Yeah, so as you said, it's a blueprint of the Trump administration's priorities when it comes to AI. At a high level, it makes things easier for AI companies. It allows them to develop technology with less red tape, as the government calls it, less regulation. And it also makes it easier for AI companies to build out AI infrastructure. There is a lot of urgency in this plan. Trump has talked about winning the AI race, beating China in that race, and that sentiment, that messaging is very strong in this document.
There's a lot here. I mean, as it relates to like the most significant parts of this, what were your key takeaways about, things that you could really see having an impact on industry?
Yeah, there is a lot there, as you say. It's an enormous document, and I'm sure a lot of people are poring over it as we speak. I think some of the things that stood out to me, firstly, the mention of ideological bias. Trump has frequently attacked diversity and inclusion initiatives. He's made this issue of speech and what he sees as a censorship of conservative voices a focus in his administration. And in this action plan, the government, or the plan, I'm sorry, recommends that the government's procurement process be updated so that the administration is only contracting with LLM developers whose models are objective and free from what it describes as top-down ideological bias. So I
So
think
this is like how they're sourcing who they're working with, basically, and how they assess those.
exactly right, yes. But I think it raises obvious questions about how bias is evaluated and who is in charge of that.
Right. What else stood out to you?
Another thing that stood out to me was the mention of how states regulate AI. Viewers of the show might remember that there was recently a moratorium that was proposed, which would have prevented states from regulating AI for 10 years. That was knocked back. It had the support of many in the technology industry and several Republicans, but it didn't make it through. And some of the points in this action plan feel sort of like a second bite at that apple. The plan encourages or instructs the Federal Communications Commission, for example, to assess whether state AI rules could impede its enforcement authority. It also states that states shouldn't receive federal funding, or federal funding should not be directed to states who have burdensome AI regulations, is the language that waste these funds. So you're seeing this sort of tension between who has the role in regulating AI bubble up again in the wake of this ill-fated moratorium.
Yeah, it's kind of an interesting question. I mean, who regulates technology? Even going back to crypto regulation, it's kind of the age-old question about we've got this new thing, we don't know where it sits in the government. Everyone wants to get their hands on it. I'm wondering, as it relates to the timeline of when we could start to see these impacts. How soon do you think this AI action plan could actually translate into changes on the ground?
Yeah, that's a great question. And that was something that I was thinking about yesterday when I was reading this document, because these are recommendations, but what would implementation of them look like? I think because some of these recommendations are geared towards certain agencies, they could conceivably adopt them as soon as they like. I mean, there's obviously logistics to be worked out there. But it does strike me that it's perhaps a little bit more direct because of the way the plan is structured. So I can't give a definite timeline. But I think it's something we should definitely closely watch, and I certainly will be covering and following.
Last question for you. What questions are sort of left unanswered in your mind?
Well, I think to the point about ideological bias, as I mentioned, there's a question about how that's evaluated, how that's considered and indeed implemented. I think that there are obvious questions about what risks will come from rolling back certain regulations and guardrails. I think there is also a question about this tension with the states and how that plays out and what that looks like. I can imagine it will bubble up. And lastly, I'm kind of interested how Trump's supporters view this plan. There are certain segments of his base who are not big fans of the technology industry, and this plan is seen as very favorable to the industry. So I'm curious how it goes down.
Well, thank you, Sylvia, for coming on and helping us make sense of that. I presume there will be many, many developments with the AI action plan, as is normally the case with government and with this government especially. That is Sylvia Varnham O'Regan. She is our DC correspondent for The Information. And that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. Before we go, I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for tomorrow's show. So until we see you then, bye-bye for now.